Hey fans, how you doing? This is Desi Arnaz, professional investor, and I want to welcome you guys today to today's show, Note Investing for Newbies. Welcome. So glad you guys are all here today. Today we're going to be talking about a topic that I'm pretty well versed on, and I think you're going to enjoy it. I'm going to be actually comparing and contrasting note investing to real estate investing. Haven't done both, right? I've done both now, quite a bit, as a matter of fact. So we'll talk about that a little bit today. And for those of you that are kind of on the fence and thinking, maybe I should put my money into a rental house, or maybe I should put my money into a little apartment complex or something like that, we're going to talk about what I think is the difference between these two and what I think makes the most sense. So I want to welcome you guys to the show today. Welcome. My show today, the Note Investing for Newbies show, and it's brought to you every Monday at 4 o'clock Pacific, and we talk about everything having to do with note investing. And I invite you guys to participate with me in chat, share, and like the program so that your friends and family and your Facebook friends or whatever, right, so that they can also benefit from this information, which can be life-changing, by the way. Can be life-changing. Back in 2013, I found out about note investing myself, and it has been absolutely life-changing for me. Now, just moving forward, if you guys want to learn about note investing, you can head on over to my website. It is simply investbrilliantly.com. And over at investbrilliantly.com, you can decide right there if you'd like to learn more. I have a lot of free information there, and you can study it and you can learn an awful lot. But if you want to learn how to do more, I also offer some coaching right there on that site, and you can right there get some coaching from us on how to invest in notes. And after what I'm going to share with you today, I have a suspicion that some of you are going to embrace notes after what you're going to learn today, because there is a reason why me and so many other professional investors, longtime professional investors, like I've been investing since 1982, right? Longtime professional investors are making the switch from bricks and mortar into mortgage notes and paper. And the reason it will become clear today. You're going to really understand that, why that's the case. Again, before I get started here with my presentation, I want to ask you guys to just share and like this with your friends on Facebook. Get them over here. Tell them they need to see this, because this, a lot of people are trying to figure out, what can I do to make sure I have a secure future? What can I do to make sure I have a good retirement? Well, we're going to talk about that. And if you're thinking about putting your money into real estate, if you're thinking about putting your money into Bitcoin, to the stock market, think again. I believe those will all be mistakes. And I believe that the thing to do is put your money into something that's safe, something that is easy to do, and that can create cash flow. And you can get all of that with notes. Thank you, Bethany, for sharing. I do appreciate you sharing today, sharing this with your Facebook friends. I want to just say hi to my lovely wife, Pat. Hello, Pat. Just to get started, for those of you that don't know what a note is an IOU. It doesn't have to be secured by real estate. Doesn't even have to be secured. It's just an IOU. If you loan your crazy Uncle Louie $10 and you have him sign the back of a business card saying, I owe you $10, that is a note. The type of notes that I talk about investing in are notes that have collateral. Now, back to crazy Uncle Louie. If you were to tell your crazy Uncle Louie, until you pay me back, I'm going to hold your cell phone. Now, you've got some collateral. If he never pays you back, you got a cell phone, right? And so that's what I'm talking about. The type of notes that I invest in are promissory notes that the collateral is real estate. And the way that it works is someone borrows money from a bank or from a credit union or something like that, and they say, I want to buy that house or that property. And they go over and they buy that property and they sign a document called a promissory note. The promissory note is backed up by another document called a mortgage. And in the mortgage, it says, if I don't pay you back as I'm supposed to under the terms of the promissory note, then you can have my house. You can take my house. That's what a mortgage says, okay? And so when I invest in mortgage notes, what happens is I step into the shoes of the bank, and if the people that borrowed the money to buy the real estate were paying the bank, now they have to pay me. And when they pay me, I get to keep that money. It's mine. The interest is mine is my profit on that transaction. Also, I have a second profit on that transaction in that I always pay less for the note than what the borrower actually owes. So, for example, if a person owes $100,000 on their house and they owe it to Bank of America, and I buy that mortgage note from Bank of America, I won't pay $100,000 for that debt. I will pay something less. I'll always get a discount. And that, for me, represents instant equity, profit, so to speak. Okay. Instant equity and profit for me. So that's another reason that I like investing in notes. So that's what a note is. And as you already know, notes get transferred from lender to lender. If you've ever owned a house, your note has probably been transferred from one lender to another, and you got a letter from your lender saying, hey, your loan has been transferred to a new lender. Moving forward, please send your payments to the new lender. That's all we're talking about. In some cases, that new lender is me. I just want to remind you guys, head on over to investbrilliantly.com if you want to learn more about how this stuff works. Like and share this, and let's get started. Okay. Real estate versus note investing. That's what I'm going to talk with you about today. And having been a real estate investor myself for 35 plus years, I know a few things about it. Okay. And so I'm going to share with you what I know about it today. All right. The strategy that I'm going to share with you is built around what I like to call the banker's blueprint, right? The banker's blueprint is basically to minimize risk and maximize return. Isn't that what banks do? They do that all the time. I was talking about the banker's blueprint and how in the banking industry, banks control real estate without owning it. Banks also control their cash flow. Because if you think about this, what banks do, since they're masters of money, anytime they deploy their capital, they make sure that they control the cash flow by telling you when the payments are due and how much the payments are, right? So when a bank deploys its money, it's not crossing its fingers and hoping to make 8% or 10%. They know what they're going to earn on their yields. They go for it, right? That's what it's all about. The other thing that I wanted to tell you is banks, they build in an upfront profit. When they know what their interest rate is, they know how much profit they're going to make. And as a note investor, I know how much profit I'm going to make at a minimum, and it's only going to get better from there. And so what I try to do is I try to help people understand to think like a banker so that they can build a better financial future for themselves. Banks also preserve and protect their capital. As I mentioned earlier, they require collateral. You got to give them something that they can take away from you or something that they can hold or whatever, right? If they're going to loan you money. And banks also, you want to keep your capital moving when you're in the money business. So these are all things that you want to do, and I'm going to show you how that works here today. I see that a few of you guys are back on. Thank you so much for coming back on. Here's something that I want you to understand about the banker's blueprint. And then I'm going to compare and contrast the two investment options. Under the banker's blueprint, you're going to find out that banks really don't invest, right? Because banks look at investing as too risky. Think about that. Banks don't really invest, right? They see investing as too risky. And so what banks do is they do something else, because banks don't buy real estate. They don't invest in stocks. They don't invest in gold or silver. They don't invest in oil wells. Banks don't put their money out that way. They don't put that money into mutual funds or Bitcoin or anything else. Banks lend, because when you lend, you control. And the lender is the controller, right? The golden rule, he who has the gold makes the rules. And so if you're the lender, you're the one with the gold. And so that's what you want to do. And when you get into the mortgage note investing business, that's the side of the table that you're sitting on. You get a preset rate of return. You get predictable cash flow. You get collateral, and almost a guarantee of no loss, no way to lose money. You know what I mean? You can never say there's no way to lose money, because I guess you can always figure out some way to lose money. But banks have built this whole system around a model that basically kind of insulates them against losing money. That's what banks have done. And all I'm saying to you guys is you want to participate in that system, since the door is now open for you to do that. Okay? So Let's move on. Let's compare a real estate investor and a note investor. Now, real estate investors, Randy the renovator and Larry landlord, right? Larry the landlord. So we all understand what these guys do. Randy the renovator, he buys old, ugly houses, he fixes them up, and he sells them, hopefully for a profit, right? And hopefully for a big profit. Sometimes the profit is really big. Sometimes these guys lose money. I mean, I've been on both sides of it as a flipper. I can tell you that it's good, but it's also a lot of work. Landlording, I don't even have to tell you about being a landlord. We all know what it's like to be a landlord, even if you've not been a landlord. You just watch your landlord and you say, I don't want to do that. That doesn't look like any fun at all, right? But what about note investor, right? The life of a note investor is a little different than the life of a renovator or a landlord. The life of a note investor is a lot more casual, a lot more relaxed. It just is. Now, I didn't know that until 2013 when I began investing in notes, because before that, I was a flipper and a landlord. That's what I was doing since 1982. But I can tell you, I love this life a lot better. And the returns are just as good as I used to get on the other side. So it's a better, in my opinion, it's just a better option. So if you are Larry or Randy here, here's some things that you gotta do in order to become a real estate investor. The first thing you need to do is you need to learn the skill set, right? If you're a landlord, that's a skill set. You've got to learn that. If you're a property flipper, that's a skill set. You've got to learn that. And you don't want to become a landlord or a property flipper if you don't know what the heck you're doing, because it's a recipe for disaster if you haven't taken the time to learn those skills. And then you got to start spending money on marketing. As a property flipper, man, I was making offers all the time. Back in its heyday, when I was really flipping a lot of properties, I was making offers 10 to 15 to 20 offers a month on real estate, because you have to buy really low, right? You have to buy cheap, buy low, sell high. That's the whole idea. And so I had to make a lot of offers, and each offer is many pages long. It takes a lot of time to negotiate, and most don't get accepted. As a matter of fact, the overwhelming majority never get accepted. So it's really kind of it's an expensive way to find business, but that's what you got to do. So you've got to spend money to find business. Then you got to look at a lot of properties. I used to call it kissing frogs. You got to kiss a lot of frogs, man. You just have to get out there and go and inspect a lot of real estate, walking through empty houses, occupied houses, empty apartment buildings. It's just, you got to do it. Driving all over the county, you got to do it in order to find that right property. In addition to that, you've also got to write and negotiate offers, as I mentioned before, right? You got to make a lot of them. And then you've got to deal with all the parties that are involved. When you're a real estate investor, you've got to deal with the real estate agents and the attorneys and the title companies and the inspectors and the plumbers and the contractors and the insurance companies. You got to do all of it, because it's your real estate. So you have to deal with everybody, appraisers, everybody. Then you got to qualify for financing. Unless you have all cash, you got to qualify for financing. And they put your life under a microscope, right? Or magnifying glass, if you want to say that. But microscope's probably better, because they really are looking deeply into what's going on in your world. Your tax returns, your financial package, your credit report, your credit history. They want to know everything. What's in your bank account? They put you under a microscope. Then, in addition to that, you got to pay interest to the lender. Interest is profit that the lender makes. This is what you have to do when you want to be a real estate investor. I'm not making this stuff up. Those of you guys that are real estate investors, you know this is for real, right? You have to pay points when you borrow the money. What is points? More profit for the real estate lender. That's what points are, just more profit in order to increase the lender's yield. That's what they are. And then you got to pay all the closing costs. You got to pay for the title report and the appraisal and the home inspection and the points and the escrow fees, attorney's fees, and the recording fees to the county and the taxes to the county and everything else that's involved. closing costs easily here in California can be $10,000, really easy. And that's not even on an expensive home. So you got to pay all that stuff when you are the real estate investor. And then you got to make all the repairs and renovations. If something breaks, you got to fix it. If something needs to be upgraded, you got to upgrade it. I mean, you own the real estate. How many of you guys, hit me up in the chat, how many of you guys in here have ever been a landlord? Put it in the chat. Have you ever owned a piece of rental property? Tell me what your experience has been like on that. Owning real estate. Has it been lovely? Has it been challenging? Has it been hell? Man, I don't know. Hell, I can't tell. But I can tell you, I had some hellish tenants. I used to own a two four-unit buildings right beside each other in Chicago. So I had a 4-unit here, a 4-unit here, and a driveway in between and parking in the back, right? And I had one tenant in there that gave me grief, and I was going to evict him. And what he did is he started organizing the other tenants, and they started a rent strike on me and called me a slum landlord, which I wasn't. But that's what they did. And they did that in order to not have to pay rent. He did that in order to not have to pay rent and in order to avoid getting evicted. Ultimately, I prevailed. He got evicted. Everybody else started paying their rent again. But you got to deal with that kind of junk and garbage when you are a landlord. Things like that just happen as a part of it. So, yeah, I don't see anything in the chat. I can't see anything in the chats about you guys, about what you guys have done. It's not showing up on my side. But I don't always get to see the chats. I noticed that on these Facebook Lives. So let me go on here. I'm assuming that I'm not the only landlord who's ever had to deal with those kind of crazy problems. One of my partners was telling me recently on his rental that he had in Kentucky, he had to send money down there to have a family of raccoons relocated out of an attic of one of his buildings down there. Oh my gosh. Now I'm teaching him how to invest in notes. He loves notes better, much better. And I think he's selling pretty much all of his real estate. So let's move on. Okay. You got to find, screen, and evict tenants when you own the property. Okay. Find, screen, and evict tenants. You got to handle all the problems, including the neighbors. Right? Neighbors sometimes are a problem for you as a landlord because they can create issues for you placing tenants. I had a property once before as a landlord, and next door to my property, apparently, the people that were renting that house, or maybe they owned it, I don't know, were kind of involved in gangs. And they would sit outside on the front porch during the day, and when my tenants or potential prospective tenants would come by to take a look at my rental unit, they get the evil eye from these guys sitting there drinking beer, and they didn't want to rent my place. Those people became my problem as a landlord. I mean, that's just crazy, but there's all kinds of problems that come at you when you are the landlord, and that's what I wanted to share with you guys. And then here's the icing on the cake. You got to deal with all this stuff as a real estate investor. And then at the end of the day, you're the last one to be paid. So like if you ever decide to sell that property, before you get paid, what happens first? The real estate agents get paid. The title companies get paid. The attorneys get paid. The appraiser gets paid. Everybody gets paid. If there's any money, the lender, of course, is paid first. But if there's any money left to pay you, then you get paid. That's how it works. So that's what you get to do. You get to learn the techniques. You get to spend all your marketing dollars. You get to invest inspect a lot of properties. You get to write and negotiate offer after offer. Deal with all the parties, qualify for financing, pay points and interest, pay closing costs, make repairs and renovations, find, screen, and evict tenants, handle all problems, and then get paid last. I did that for more than 30 years. I did that. So I'm not saying it's a bad thing. I didn't know any better. Once I learned better, I got myself out of that quickly. And here's why. See, because as a note investor, here's what happens. All you've really got to learn is the banker's blueprint, right? Don't invest, lend. Make sure you collect interest. Make sure you get collateral. I mean, because that's what it's about. And then keep your money in motion. When I show you money in motion today, it's going to blow your mind. It is amazing what happens when you keep your money in motion. And you may not even know what that means, but you're going to know in just a couple more minutes because I'm going to go through that. As a note investor, I don't have to do any marketing to find deals because when you're the lender, the deals come your way. When people know you have money, they bring you the deals. Even rehabbers come to me and say, hey, I got a deal. Will you fund it for me? So I don't have to go chasing down deals. When you have the money, because you're a note investor, the money will find you. The deals will find you. I don't have to deal with all the parties. I don't have to deal with the attorneys and the title companies and all the other people involved in a real estate transaction. I deal with the borrower, period. That's it. Me and him, me and her. That's it. I don't have to write any offers because I'm not making any offers. I'm the lender. So I don't have to deal with any of that. I don't have to qualify for anything. I'm all cash, paying all cash to buy mortgage notes, and I'm investing in those notes. So there's no qualifying on my part. Okay. I don't have to make any repairs or renovations because I don't own the property. I don't have to deal with tenants, toilets, termite, or terrible neighbors. I don't have to deal with any of that. It's not my problem, right? I get paid. I get paid. I don't have to deal with any of those problems, and I get paid. And best of all, here's what I like most. When I do get paid, I get paid first, not last, okay? And I get paid even when the tenants don't pay. The owner still has to pay me. The landlord still has to pay me. I get paid even when there's a tenant strike. I told you I had a tenant strike in 2 of my buildings. I still had to pay my darn mortgage. You think that my lender cared that my tenants weren't paying me? Not at all. My lender got paid. They got their interest every single month. I wasn't making money, but they certainly were. And so that's what I'm telling you guys. You need to learn how to do this stuff, because it's good to be the lender. And so you want to be the lender. You want to be the note investor. So what do you guys think of that? That's pretty good stuff, isn't it? Well, Goodwin, I'm glad. Goodwin says he has not had really big problems, right? With, let me just see here. Goodwin says, I haven't had big problems. So far, so good being a landlord. Right on, Goodwin. Yeah, I had a lot of good tenants. I don't want to make it all sound like doom and gloom. I had a lot of good tenants over the 35 years or whatever that I was landlording. So I can't say they were all bad, but there were certainly some problem tenants without a doubt. And if you're a landlord long enough, you're going to have your share. You know, it's just the way it is. But it's still a big opportunity. Look, I'm about to get into the money in motion strategy here. I just want to remind you guys one last time here, if you don't mind sharing and liking, I would appreciate it. But this money in motion strategy that I'm going to share with you is going to blow your mind. Albert Einstein is credited with saying the most powerful force in the universe is compound interest. Did he say it? Heck, I don't know. But that's what I found on the internet. So maybe he did. Doesn't matter, but I agree with him. Let me show you something here. Let me show you why I agree with him. This is certainly, from a financial standpoint, this is one of the most powerful things you'll ever see. I'm going to give you an example of what I call money in motion. And you're going to see something that will blow your mind right now. In the example that I'm going to use this little house in Akron, Ohio. This is a mortgage note that was offered to me some years back. I didn't actually buy this note, but it was offered to me, and these were the terms that I could have purchased it under. Okay? I just didn't put the deal together fast enough. Someone beat me to it. So bottom line is this. This house was valued at $60,000 at that time. The homeowner owed $48,000 to the bank. Their rate was 4.375, and they had 10 years left to pay. The payments were $494 a month. Now, just so you know, I don't want to invest my money at 4.375. That's not my idea of fun. As a matter of fact, I won't do it because I now know how to make sure that I get good interest rates, double that, triple that. Okay. I know how to get those kinds of rates, so I don't invest my money at those rates. However, there is a way that I can buy a 4.375 mortgage note and still get a decent return, and that's by buying that note at a discount. So let me tell you what that looks like. This particular note I could have picked up for $39,000. However, the day that I bought it for $39,000, the people would have still owed me $48,000. So I'm investing $39,000 to collect interest on a $48,000 note. Does that make sense? since I'm collecting interest on a $48,000 note at 4.35, and I only have $39,000 invested in it, then my $39,000 is actually earning a 9% return. Now I like that. 9% works for me. 4.35 doesn't. And so in order to boost the yield on my investment dollars, I buy at a discount. Okay? That might be kind of a strange concept for some of you guys, but you can learn more about how that kind of thing works just by heading over to my website. It's investbrilliantly.com. And I have a lot of free content there, videos and articles that will help you understand that whole idea a little better. But moving on. Okay, so now this note could be picked up at 9%. And over a 10-year period, you would collect 120 payments of $494, which comes to $59,280. So in other words, your $39,000 will grow to $59,000 in 10 years if you bought this note, which is wonderful, right? That's wonderful. 9% is wonderful. Nobody can really sneeze at 9%. But let me show you something. Suppose I could show you that you could also take that same $39,000, invest it at 9% in this note and additional notes using the money in motion strategy. And instead of $59,000 at the end of 10 years, you'll have $92,000 at the end of 10 years. Same $39,000, same 10 years. But you do it by using compound interest. It's also said that Albert Einstein said, people that understand compound interest earn it, and those that don't understand it pay it. Wise words, huh? Let me show you how this works. Money in motion. We already said the payments on that little house, $494 a month. So if you collect 12 of those payments, how much is that? That's $5,900, right? $5,928 that you would have collected in 1 year in collecting $494 a month. So now you got $5,900. What are you going to do with it? What I'm showing you is this. Money in motion says put that money to work. Don't take it and go on vacation. Put that money to work. And here's what you can do. Invest that $5,900 at 9%. Okay, you invest that $5,900 at 9% into another note, maybe a 5-year or 10-year note. And you can do that by buying something called a partial, but that's a topic for another day. But here's the point. You invested $5,900, and now in year 2, you're collecting $494 per month for the first $39,000, and you're collecting $123 a month for the second $5,900 that you invested. You see that? Ho, check this out. Now, year 3, now you've got $7,400 to invest, don't you? And you put that to work at 9%. And now you're collecting $494 plus $123 plus $154 per month. This is how you do it. This is money in motion, compounding interest. Year 4, now you have $9,200 to invest. And you can get $192 a month with that. You see what I'm doing? I mean, I guess you guys get it. I'm not going to take you through 10 years, but you guys get it. At the end of just year 4, you're collecting $963 a month, which is $11,500 a year. Okay? $963 a month, $11,500 a year. You only invested $39,000 to start this whole process. And now you're collecting $11,000 a year. I mean, is that powerful? That's powerful stuff. One of the most powerful forces in the universe, according to Albert Einstein, reportedly, right? So here's what I want you to know. You just keep doing that. And if you keep doing that over a 10-year period, instead of $59,000, you will have $92,000 from your $39,000 investment. How many of you would like to see your retirement account grow from $39,000 to $92,000 in 10 years? That's nothing to sneeze at. And you can do that with notes. And you do it safely because you have collateral. You're not taking a big old risk, putting your money in the stock market and crossing your fingers and hoping that when you hit retirement, I hope the market's up when I retire. Maybe it will be, maybe it won't be, maybe it'll be flat. We don't know. But with When you're the lender and you have collateral and you decide what rate you're going to earn on your money, it's a whole different ballgame. That's why banks don't invest. Banks don't flip houses. Banks lend. You can do the very same thing. That's pretty powerful. That's called financial literacy. And this is the stuff that you can share with your kids. And if you don't share it with your kids, shame on you, right? This is the stuff you can share with your kids. You should start teaching them at age 12 when they get an allowance. Start showing them the power of what can happen if they were to just take a little bit of that allowance and start setting it aside. You know, you may be saying to yourself right now, hey, I don't have $39,000. I get that. Okay, I get that. Not everybody has $39,000. But let me ask you something. Can you afford $2 a day? $2 a day. Let me show you the power of $2 a day compounded, because this will blow your mind too. $2 a day. Who can't afford $2 a day? We can all squeeze it out somehow. $2 a day, that's $60 a month, right? $2 a day invested at 10%, this is how I did this one, at 10%, because now that you know about notes, you know how to put your money to work at 10%, don't you? Okay. $2 a day invested at 10% over a 30-year period will grow to $130,000. Now, here's what I want you to know. If you're 35 years old, you're going to retire at 65 years old. Okay? You're going to work another 30 years, let's just say. If you do this, you'll retire with $130,000 or thereabouts. If you don't do this, you could wind up like 63% of most retirees at age 65, according to the Social Security Administration. 63% of retirees that reach age 65 have less than $50,000 in cash in the bank. Less than $50,000. As a matter of fact, I think for most of us, unless you came from a very affluent family, for most of us, if we just look around in our own family, look at all the people that are 65 and over in your own family. How many of them can put their hands on 50 grand today? Right? How many of them can do it? In my family, certainly not many. Besides me, I don't know who else, honestly, can do it. They'd have to sell everything they own if they even have $50,000 worth of stuff. You know, so, I mean, I think that statistic holds water. So I like to say it this way. People are broke at retirement because they made a $2 mistake. $2. So you can retire with $130,000 if you're 35 years old and you just start using your head, use some financial intelligence. If you have the ability to do more than that, look at this, $10 a day, $10 a day. That's your Starbucks habit, right? Maybe Starbucks and your cigarettes. I don't know. $10 a day. You can retire with almost $750,000. Put it to work in the money in motion strategy. Put it to work. That sure does beat being broke at retirement and going to work at McDonald's and asking people that very important question. Do you want fries with that hamburger? Or going to work at Walmart and saying, hey, do you need a cart today? Welcome to Walmart. Do you need a cart? Shopping cart? You see, the people that are working at those places, I'm not putting them down, but that wasn't part of their retirement plan. They didn't plan to get out there and go to work at Walmart at 65, 70 years old, but yet you walk in the door and there they are. You see, they made a $2 a day mistake. Are you making a $2 a day mistake? Are you? Are you paying $500 for a car every month when you could be paying $400 and you could put $100 a month away? Are you doing that? I mean, you're just making these little mistakes that don't seem like they're important until you get old. And then you look back and your kids and grandkids say, hey, why are we broke? Why are we not wealthy? And you say, well, I blew it. I wasted it. And all I'm saying is you don't have to waste it. You don't have to waste it. Use your head. Use some financial intelligence. Now, you can invest in notes. You can start today. You don't have to have a lot of money. If you don't have any money, you can start today. You start by first investing in your brain and your knowledge and learning that stuff. The difference between people who have and people who don't is just knowledge and then some action, right? You need to first learn some things. You can get over to our website, investbrilliantly.com. check out our coaching program. Okay. As a matter of fact, let me just pop this up on the screen. You see right here, it says, tell me about the coaching program. This is my homepage right here, investbrilliantly.com. Tell me about the coaching program. Go there and click on it. It's not going to bite you. And watch and see what I offer in the coaching program. It's $97 a month. That's nothing. And I'll help you get you started in the note business, whether you have money or whether you don't have money. It's not about how much money you have. It's about how much knowledge you have. Even if you have money, eventually you're going to run out of money like I did. I was buying notes at the beginning with my own money. Then all of a sudden I had no more money because all my money was deployed. I had to learn how to buy notes using other people's money. So I teach you how to do that too. You need to learn this stuff. If you don't learn this stuff, it's okay. Maybe you have another plan, but this is a plan that works. This plan works. And all I'm suggesting to you guys is you need to have a plan. And if you don't have a plan, here's a plan. We have a plan that works. You need to sign up for it, get started with it, or don't. Whether you do or don't, my life is fine. I'm completely set. I can stop right now. I do this now as a way to give back. I enjoy this. I enjoy watching people's lives change and saying, I'm a part of that. I contributed to that. That's what I enjoy. Okay. And I especially enjoy it when I see them teaching their kids this stuff. That brings me a special amount of joy, because I'm thinking, okay, we can break this cycle of worry about money all the time, right? I remember before I had any money, I used to think that rich people only thought about money. That's all they ever think about. And then I realized actually it's just the opposite. The more money you have, the less you think about it. And I'm going to give you a perfect analogy to prove it. Let me ask you something. When you're driving your car, if your gas tank is full, how much are you thinking about gasoline? Versus when you're close to empty, how much are you thinking about gasoline if you're on the highway, right? You can think, oh man, I hope I make it to the next gas station. I hope I make it. All you can think about is gasoline. It's the same thing with money in your bank account. If you have no money in your bank account, all you can think about is where can I get my next dollar? You're thinking about money all the time. But when you have a bank account filled with money, you don't think about it. You just live your life. You know the money's there. You sleep well. You get things for your family. You don't have to say we can't afford. You don't have to say we can't do it right now. We'll do it later. That's poverty thinking. Get that crap out of your head. Sorry about that word. But get it out of your head. That's poverty thinking. Stop it. I've just shared with you guys something to help you to become financially intelligent. I've got a system to show you how you can stop being broke. Stop living from paycheck to paycheck. Stop worrying about money. Stop worrying about your future. Come on, get over that. I mean, I'm old now. I'm not trying to be politically correct. To sit around here and say, well, money's not important, it's just BS. Money is important. Money is a warm house and healthy children, doctor's appointments, and nice cars, and all the things that you need to have a good life. Taking your family on vacation. Money's all that stuff. Money is warm shoes, new clothes, just all the stuff you need and all the stuff you want. So, get that out of your head. And you deserve it. That's all I'm trying to tell you guys. You guys deserve it. Okay. And we have a way for you to do it. Get over to investbrilliantly.com. Get yourself signed up, or don't. Okay. Make another excuse for not doing it. Doesn't matter. But if you do get yourself signed up, I'll work with you personally. I'll help you. I'll show you what to do. I'll show you how to do this. I'll show you how to get out of that whole cycle. And then I'll show you how to share it with others, because you got to pay it forward, guys. You got to pay it forward. When you get blessed like this, you got to pay it forward. So I want you guys to get on over there, investbrilliantly.com, sign up for my coaching program, and let's get you moving. Okay. Don't put your money into real estate. That's just my opinion. You can put it into real estate if you want to. But if you buy notes, one of the benefits of buying notes is that you're going to wind up with real estate anyway, because some people are not going to pay you and you're going to take their house. Not that you want to do that, but if you need to, because they're not paying, then you can wind up with the house. And then if you want to be a landlord, be a landlord. Put a tenant in it. Rent it out. Only you would have purchased that house for way cheaper than market value. So you're going to get houses for less, apartment buildings for less. You're going to get positive cash flow. You're going to get good returns on your money. To me, there's just no contest between real estate and notes. There's no contest. And I've been in both far longer than most people you talk to. Far longer. Bought my first rental house and flipped my first property in 82, and I'm doing it ever since. So this is far better. There's nothing, there's no contest in my opinion. Okay. I'm not against owning real estate. I personally don't want to own it anymore, but I am saying this. If you're going to buy real estate, buy it through the back door, buy it through the paper. Don't buy it through the front door and pay retail. Don't be silly. Buy it through the paper. All right, guys. Look, if you guys have any questions, if you want to hit me up on here, feel free to do it on the chat. I also want to, oh, Marie's on. Hey. FireUpLive.com. I wanted to just share that, guys, with you guys. Fire Up Live. I will be speaking at Fire Up Live in October. I think it's October 10th. And it's going to be on my website on the events tab. You can go there at investbrilliantly.com on the events tab. If you guys want to participate in that, that's going to be a really fun event. And you're going to learn so much. But I'll be speaking at Fire Up Live about investing in notes, along with some other very dynamic speakers. I'm literally honored to be in the company of the people with whom I'm going to be speaking. And you'll see that when you go to fireuplive.com, you'll see who the speakers are. You can read the bios. We got some impressive talent there. Okay. Thank you, Marie, for coming on and reminding me about that. So, guys, that's all I got. I want to thank you all so much. I'm Desi Arnaz, professional investor, and I will see you guys next Monday. And hopefully we won't have the technical glitches that we had today. And God bless you all. Stay safe.